really knows what the real price discovery looks like in gold and silver when the West has suppressed it for so long to maintain an illusion of bond market and dollar supremacy, not just in the United States, but all of Western Europe. And this is the game that the rest of the world has now uncovered and pushing back against. You get mainstream guys like Jeffrey Gundlach, who is talking about gold easily at $4,000 an ounce here in the near future. He's a mainstream guy and, a bond guy. And he says a 60% probability of recession. I think that's low, to be honest with you. And why don't people say that in buying Dow stocks at 40,000 when I remembered at 2,100? And why don't they say that, the Bitcoin people at 90,000 when, Andy Hoffman, who used to write my newsletter, was telling me to buy it at 400. It's just a perspective that is silly across the board. And the one delineation that people miss is that they may be the only two products, or gold, silver, platinum, palladium, those four in terms of hard commodities, that have been suppressed openly. And it's not conspiracy theory. I mean, there's court cases, there's empirical evidence, there's, JP Morgan, there's a million. Just look at the AM and the PM fix. There's a million pieces of information where, we could have a 2-hour long debate about manipulation, and it's been there forever. And that's been the West's way to support this illusion of dollar supremacy of the fiat system and Gibson's paradox, where you suppress interest rates for 3 decades, you have to step on the canary in the mine shaft, that's gold. So we don't even know what the real price discovery looks like. But, in a world where the Dow Jones can go to 40,000 and Bitcoin to 100,000 and, and the price of your home can triple, and yet there's still value in it, right? Well, people's they have selective perception, if you will. So I think we're a long ways away. And silver, to that point, is that argument on steroids. It's the most undervalued, overly manipulated market on the planet, which holds the largest concentrated short position on COMEX, concentrated by a handful of 8 commercial banks that short the crap out of it. And for various reasons, whether it be the military industrial complex needing to keep it cheap to buy and make high-tech weapons, or any other story you want to believe. That's the one I believe it is, and it's not talked about enough. It's funny, you got BlackRock, who is the primary custodian of SLV. They would have all the vested interest in the world of suppressing the price of silver, all of it. And they also major players in PSLV, because they're the ones who own all the military companies. And they are used, those weapons are sold around the world to blow up places like the Ukraine. And then who gets all of the contracts to rebuild it? Well, it's BlackRock. So they hold down the price to make the weapons, and then they're there to rebuild everything. This is all about money. This is a lot deeper than people think. But it's been exposed. It's been exposed by half of the world understands what we're doing. You ain't seen anything yet, is my guess. So, I get it. It would have been better to buy it all along. People should have listened to you a long time ago. This is the argument for cost averaging. I've been buying every 2 weeks for 35 years. I remember gold at $250. I remember silver at $3. And so here we are at 3,000, and not a damn word by the media. Silver is that opportunity that you missed in gold, because it should be a whole heck of a lot higher by every metric. And it's coming out of the ground at a 7-to-1 ratio to gold. So if you have gold right now at $3,020, if we take 3,020 and we divide it by 7, which would be the geologic ratio right now, you're at $435 an ounce. So if you told me tomorrow morning gold would be over 400, or silver would be over 400, most people would laugh, but I would say, well, that's actually logical. That's the geologic ratio. So just cost average your way in, and it's not too late. And that real value is found in silver right now. The Bank of International Settlements, which is the central banker's central bank, the most powerful in the world, their innovation hub was for 4 years developing Mbridge with Chinese technology, with China, Hong Kong, Thailand, and the UAE. It was operational, and this is what Dilma Rousseff said would be the platform for trading the unit settlement token, which had been agreed upon in principle, which could not be which had no, Enbridge had no accessibility with SWIFT. So, in other words, these countries' ability to trade their central bank digital currencies across border, free from SWIFT interference, and settle in gold, in essence, is what it was. And at the 12th hour, they pulled out and said, well, we can't be involved with any countries being sanctioned by the West, so we're closing down Enbridge. They just realized that Russia was the R in BRICS, evidently. And so they've, I think, kind of gone into a shell. They've changed it from Enbridge to the bridge, and they're working just as hard on it as they ever have. Indonesia just became a full member. They have the largest deposit of nickel in the world. You're seeing 35 or more countries formally apply, but it's quiet. All's quiet on the BRICS front. I'm assuming that there will be certainly some confusing signals in people's eyes as they try and refute that the BRICS are still moving forward with an agenda, as you see Trump overtly try and extend more of an olive branch to Xi Jinping and Putin than to the entire BRICS network. But when he says we're going to put 150% tariffs on any country that, if the BRICS continue to do this stuff, that's not a tariff. That's a sanction masquerading as such. A tariff is strategically employed, like in the auto industry. If Germany can sell us all of their cars with no tariff, but when we send ours to Germany, there is a tariff, that's not fair. I get that. But just blanketly saying, if you don't do this, then we'll do 150% tariff, that's a threat, that's a sanction. That is, to your point, what the marketing director of the BRICS would use as a rallying cry. I think that they realize that it was much easier to be open and overt under the Biden administration. It will not be the case with the Trump administration. It will make analysts' job much more difficult. But you do not see the flow of commodities abating heading into China and to the East. You do not see, in my opinion, any countries really pulling away from the whole concept at all. It's just going to be a little bit more challenging under a president here who has outwardly spoken against it. But I haven't seen much in the way of any capitulation on the side of the BRICS. I think they will work every bit as hard, just in the shadows. And again, it's all about commodities and physical possession. And I think that's where we're going. I think ultimately what could really happen is the breakdown of the Western system in terms of setting price for commodities. And you will see it move to the United Arab Emirates, to the Shanghai Exchange, to the Moscow Exchange, to exchanges around the globe that have been not only accumulating it, but more so on a cash and carry basis, where 70 to 80% or more of all the transactions settle immediately for physical delivery. That is an exchange that you want, where bars that you buy are etched with the serial number of the contract that you possess from one of the handful of pre-approved refiners, instead of it being rehypothecated thousands of percent, creating this fractional system that is breaking down right in front of us. So that's when things will start to accelerate, when the West is exposed that their whole system of setting the world's prices on commodities, like the price fix, as you say, will transition to countries who have a vested interest in seeing the real price of gold and silver. And maybe, just maybe, the current administration here understands that, and that has a lot to do with the onshoring of gold and silver. Maybe he gets it and was advised that, look, this is a trend that won't stop, and it's going to negatively impact those who have not secured gold and silver. And that would be the answer if people had been following you and I long enough. Look, the biggest thing in the world to me is that huge money across the globe is transitioning to a system of commodities and transparency, no longer opaque debt instruments. It's give it to me, I don't trust you anymore. And I understand that it's warranted, but that's where we're going. And that's why I think you're seeing the BRICS not slow down those countries in their production and accumulation of the world's commodities. And here just a few weeks ago, Indonesia becomes a full member. They still are admitting members. Again, all of the members who have strategic stockpiles of commodities in ground and or strategic shipping lanes above ground or on sea, and Indonesia certainly fits that with not only where they are geographically, but also the largest in-ground supply of nickel. So yes, The BRICS is not something that should be dismissed, should not be forgotten about. It will be harder to see. The BIS is a Western institution. They trusted us, they trusted the West, and the West betrayed them at the 12th hour. Bad move. And that's the exact same thing that Trump is doing here, in sort, by saying we're going to tariff you, which is actually a sanction if you continue. It's the bullying, it's the suppression, it's the coercion, it's the underhandedness. And that's what this new system will strive to avoid. I don't anticipate it going away anytime soon. In fact, only getting more resilient and probably much more hardened in terms of their infrastructure and their commitment to breaking that Western hegemony and standing on their own 2 feet.